Good morning, Paul Georgie from Allendale. It's November 5th, 2010, Friday morning. We've got good news from the economy. Unemployment numbers were positive and showed improvement. So that has got the dollar changing directions here this morning. We're up about 60, 70 points right now in the dollar as we speak. Crude oil is pretty much unchanged. Gold is down a couple dollars, and stock markets actually showing some strength. Their stock indexes, the market's not open yet, but showing some strength here this morning as well. How's that going to impact grains? Probably going to mean lower prices here today. We had corn market overnight down 3 to 4. Would expect that we may see some more profit taking in the corn market, wheat market possibly, even carry over into the soybeans here today. But I think the support will come from the USDA report that will be released next Tuesday morning at 7:30. Setbacks right now will find support as the trade's looking for a lower yield number coming out of USDA. Around 154.4, I believe, is the average. We've got the results on the trade average estimates on the Allendale Advisory Report here on the web. The soybean number, looking for an increase there, 44.6. So looking for a little bigger soybean number, but I think when you look at the soybean number and what trade is looking at is the ending stocks. We expect, as well as the trade's looking for, a decrease in ending stocks because of the tremendous demand that we're seeing out of China. So we've got some big reports ahead of us next week with the USDA, and then we've got the G20 meeting that will be discussing currency guidelines and hopefully come up with some type of a currency agreement is what is expected there, and that could have an impact on the dollar as well. And as you watch the trade here over the last few days, it's been in the grain markets especially, it's been dictated by dollar movement. The dollar ticks up a few, grains go down, dollar goes down, the grains go up. So those are things that are going to be continuing here for the next few days, especially into next week until we get some results from the USDA and some information out of the G20 meeting. Other news, weather seems to be improving some. The southern plains should get some rain next week. South America they've taken a little bit of the rain out of the forecast for this week, put it in for later next week, which is good and bad. Some areas are drier than need be right now. However, planting progress continues. The last report I looked at, they're at about 68% planted out of Brazil and Argentina. Those areas need to get some more planted. So as we get drier weather, it allows them to get their crop in the ground. And then weather forecast looks like there's going to be plenty of moisture coming in later next week. So not necessarily an ideal condition, but it appears like it could develop into a good condition if moisture continues here. So that's something we're going to be watching here for several months. The Kansas City Board of Trade announced yesterday that the Board of Directors will increase their storage rates on deliverable grain about a third, from 4 cents to 6 cents, in an attempt to straighten out the storage issues and create an incentive for investors not to maintain ownership of wheat and put it in storage, which will hopefully help that delivery process come into line. In the livestock trade, news is pretty much non-eventful right now. We've got cutout values down in cattle, down 86 cents in choice, $1.26 in select. The cattle trade, I think, is going to be watching the dollar as well and what the investor attitude is. We had a weak technical action yesterday where we posted new highs from the previous day and yet closed at the lower end of the trading range. Not a good technical sign. Would expect that could weigh on this market today. Cash trade in Texas was at 97 to 98. With a weaker product, we would expect weakness to continue or pressure to be applied to the cash cattle side as well, and probably see some pressure here in the futures market. In the pork complex, a little better news there. We had a cutout value up only 3 cents yesterday, but we finally seen an improvement in cash hog prices. Reports of anywhere from $1 to $3 higher in the country yesterday. The packers appear like they now need some inventory for as early as next week. Early in the week, they were reporting that they had 2 weeks supply ahead of them. So seeing some improvement there, seeing that cash markets could improve a little bit. There is some hope that we can see some turnaround in futures prices as well. Although technically yesterday we went right up to a long-term downtrend in the nearby hog contract and then sold off. Not a positive sign at this point either. But in general, I think the trade will be watching the dollar very closely today. If we maintain the strength in the dollar that we see currently, we could see a little profit taking in some of the commodity markets. If you got any questions, give us a call here at Allendale, 800-262-7538. We wish you a very successful trading day. We'll talk to you Monday morning. Thank you.